What's up, everybody? Welcome back to season 2 of the Mathis Real Estate Group show. Today we are talking about one of the hottest topics in real estate, which are forbearances. And we're going to give you 4 tips on what you need to make sure you're doing if you decide to go and ask your mortgage company for a forbearance. So let's go. So first we want to start with, what is a forbearance? We get a lot of questions around what are they, what are the impacts of them. So what we're going to do is start with what are they, and then we're going to talk about some of the differences that you see right now between a forbearance during COVID-19 versus a typical forbearance, and then some things for you to be aware of, as well as 4 tips that could potentially help you if you decide to go get a forbearance. So what a forbearance is really is just a way for you to either restructure or delay payments without becoming delinquent on your loan. It's advantageous to a struggling borrower, but it also benefits the loan owner because typically it is cheaper for them to work out some type of deal with someone who is already in the house under a loan program versus letting it go into foreclosure and doing all the fees on top of that. So right now, one of the big things is you're hearing a lot of different companies say a lot of different things about what they're doing during this time. You're hearing the federal government saying what are the things that they are required to do. So we're always going to start this off with a disclaimer of talk to whoever is your mortgage provider. It's different. There's a lot of them out there. Have a direct conversation with them. They can give you the absolute specifics of what they're doing versus what they're being required to do. So one of the big differences right now is your mortgage servicer or provider a private company, or is it a government-backed entity? So if your loan is owned by a company like Fannie Mae, Freddie Mac, Ginnie Mae, or maybe it's a government type of loan like a USDA loan, a VA loan, an FHA loan, or a Federal Housing Authority loan, those have the government protection on them, and there's some very specific guidelines around each one of those. So we'll just give you some of the things that the Fannie Mae program is doing for their people. So they've gone out there and they said that they are not doing any kind of foreclosure sales and evictions. They've been suspended for at least the next 60 days. Homeowners that are impacted by COVID-19 and can demonstrate that they've been impacted, they can actually reduce or suspend their mortgage payments for up to 12 months. Now here's a key though, guys. Forbearance is not forgiveness. Forbearance is not forgiveness. Just because someone says they suspend or move your payments or whatever they decide to do to help you out does not mean that you do not have to pay that money back. You still have a loan that you owe money on. The other thing Fannie Mae is doing right now for the people that have borrowed money through their programs is that they are saying that they are not going to report anything on your credit if you miss a payment right now or if you have to do a forbearance. Typically, a forbearance will get reported to your credit company. It's not as bad as a missed payment. It doesn't hit your credit as hard as a missed payment. It still gets reported and it has a negative impact on your credit report. Fannie Mae says they are not doing that right now. Forbearance plan in COVID-19 for Fannie Mae, they will not incur late fees. So most of you know if you pay beyond a certain date of the month, you incur a late fee on your mortgage payment. You go too far beyond that due date for your mortgage payment, and then your loan can go into foreclosure. And the last part is, after forbearance, the servicer must work with the borrower on a permanent plan to help maintain or reduce the monthly payment amounts as necessary, including a loan modification. We're not going to get into loan modifications today. That's more in the lender's field. We're just hitting on the high notes of the forbearances. Again, all of these things are just what Fannie Mae is doing for the people in their programs. Each company, each provider will have something different, if they have anything at all. The best thing you can do is call your loan provider. Some things to be aware of with a forbearance. So number one thing is, beware of scams right now. We are shocked at how many we're seeing come out of the woodwork, and it's gotten worse in the digital age. So anytime someone asks you to charge, if they're going to charge a high upfront fee for their services, it could be a scam. If they promise you a loan modification, it could be a scam. If they ask you to sign over your property title or any papers that you really don't understand, it could be a scam. Ask for clarification or contact us. We're happy to look at them. If they look fishy to us, we'll get them and get you in contact with some of our people that can help you through the process and make sure you're not getting taken advantage of. If they tell you to make payments to someone other than your mortgage provider or your mortgage servicer, that could be a scam. If they tell you to stop making payments altogether, that could be a scam. We don't know what the rules are for your particular provider and how they structure things with you. So most of the time they're going to work some type of payment plan out, not a complete stoppage to payments overall. And then if they promise you payments in connection with you providing them a credit card, that could be a scam, and I would almost bet that it is a scam. So be careful of scams right now because they are numerous. They are trying to take advantage of a bad situation. So just be mindful of that. If anything looks fishy or feels off, feel free to reach out to us. We're happy to look at things. The second thing that you want to be aware of with a forbearance is the type of forbearance that you get. How is it structured? One of the biggest things that we see people do is what we call a balloon payment. A balloon payment. So that means that say you call your mortgage provider today and your mortgage payment is typically $1,500 a month. And they say, you know what, we understand with everything going on, we're gonna give you 3 months forbearance. You don't have to make another payment until 3 months from right now. Great, you think that's awesome. In 3 months though, they knock on your door and they go, hey, we want your mortgage payment plus the $4,500 from the past 3 months. That is called a balloon payment, and that is not untypical. So make sure that when you're talking with your mortgage servicer about a forbearance, you kind of get the nitty-gritty details of how it's being structured. And just remember that most people, they won't have 6 months or 3 months or whatever your forbearance worked out for a balloon payment. So just a couple things to ask and make sure, see how they structure. They can structure it. A balloon payment is not like I said, it's not atypical. They do try that. You can argue and stand your ground and ask for a different type of modification. Another typical one that we see is where they take your months of payment and they add it on to the back end of your loan. So for example, say you have a 30-year loan, they would just take those 3, 6, 12, whatever, how many months you work out with your provider, and they would become a 3-year and 3-month loan, so to speak. So it just gets tacked on to the back end of your loan. Doesn't really change much in terms of your payments or anything along those lines. So top 4 tips that we want people to know about if you decide to go get a forbearance right now. Number 1, know who your servicer is. Know who your servicer is. They're the ones who really control whether or not you can get a forbearance. They control the details of your forbearance. So know who you're talking to. Know who charges you every single month. That's the person you need to talk to. Just because another company has some rules out there, it does not apply to your company. Remember, about 50% of the loans in the United States are backed by the US government. So there is a good chance that your loan may be under the federal guidelines of what is or is not allowed during the COVID-19 pandemic. That being said, you need to check who is your mortgage servicer. The second thing, the second key tip is be prepared to answer questions when you call the mortgage servicer. I hear a lot of people come back to us and say, well, I did not know they were going to ask me all these questions. So they're going to ask you things like, why can't you make your payments? Is the problem you are facing temporary or permanent? Right now they're trying to figure out, are you ever going to be able to make those payments again? And then the length of forbearance that you will need. They want to know the state of your current income, expenses, and other assets, including how much liquid cash you have in the bank. They're going to ask for those things, and most likely they're going to ask for proof of those things. So they're going to want bank statements. They're going to want different things to show what type of assets you have, either hard assets such as cars or your house, or liquid assets such as cash. And the last piece is it's different, of course, if you're in a VA loan and you're a service member with a permanent change of station orders and your whole situation changes, that will create a different set of criteria. Again, it's important why you need to talk to your mortgage servicer, and they're going to ask you these questions, so be prepared for all of these questions. The third key tip, get your forbearance in writing. If you're on the phone with somebody, don't take what they tell you on the phone as gospel truth. Get it in writing somewhere. Get them to send you an email, and until you have it in writing in your hand, that it is proof, that you have proof of what they tell you your setup or agreement is, you need to make your payments. You need to make your payments until you have that in your hand, because basically, if we just have a conversation about something verbally, it doesn't really mean anything, right? There's no proof of that. So you want proof, get it in writing. And the last key tip is check your credit score every month as this goes on. If you are under the federal protection guidelines and you have a government-backed loan right now, and if you go in and you get a forbearance and it falls underneath like the Fannie Mae guidelines where they say they're not going to touch your credit based on late payments or a forbearance at this time, double check, right? Trust, but verify. We want to make sure that that's still going on. Keep an eye on your credit, make sure nothing is hitting it or adversely impacting it in this time period. As always, guys, we're here to help you through all of this. Any of your real estate questions, any of your mortgage questions, we are happy to provide assistance. If you need us to look at documents with you, if you need to talk to our lender partners because you have questions, if you need to find out who your service provider is, and you just want us to be there on the call with you to help you out, we are here for you throughout this whole time period. Anything we can do to help, or if you're like, we're in over a hedge, we need to get rid of the house, we need to sell it now before we get too far behind or too far underwater, you can't get a forbearance done, whatever the case may be, reach out and contact us. We are here to help you through that. We are here to help you lay out a game plan to make sure that you have a house or a roof over your head throughout this whole time period. But we're here for you. We've been around in the community selling houses for over 30 years. We're happy to answer any questions you guys may have. As always, stay safe, stay healthy. Stay tuned because we're back into season 2 of this thing and we're excited to get rock and rolling throughout the rest of 2020.